Well, the bottom fell out of the oil market early in the pandemic, with West Texas Intermediate future prices actually trading in negative territory in April 2020. But as the world returns to some sort of normality, coupled with the war in Ukraine, well, the price has ballooned. In the days leading up to the invasion, the WTI futures price was hovering around the $91 a barrel mark. Immediately after the first weekend of the war, the price broke $100 a barrel and hit $120. It's now trading below $110 a barrel. Well, that has had a major impact at the petrol pump. The American Automobile Association says the average regular price a year ago was $2.87 a gallon. That rose to $3.61 just a month ago, before hitting the record price of $4.33 a gallon on March 11. Well, Abhi Rajendran is head of oil markets research at energy information company Energy Intelligence, and he joins us now from New York City. Sir, thank you so much for joining us here on Al Jazeera. Lots to talk about. Let's start with the U.S. president announcing this unprecedented release of U.S. strategic oil reserves. Do you think it's going to have the intended effect?
Hi, first of all, thanks for having me. Yeah, certainly a historic announcement, biggest ever strategic petroleum reserve release. Our thoughts are, I think, two main points, which are one, I think over the near term, you're going to see more supply disruptions and dislocations and messy flow around the world. And, the key point is that the SPR is designed to add more supply to a market that really needs it. So I think, the first point is, from that standpoint, yes, we think it'll help. It'll provide much needed supply, to the market. Perhaps it helps to, curb, some of the runaway prices that we started to see, right? We saw oil prices move to 120, 130. I think in an extreme dislocation scenario, you could have seen prices in the $150 to $200 range. So perhaps it helps to curb, some of those runaway prices over the short term. And I think, the second point is that, the other effect that the SPR is going to have is that, again, it's a massive inventory release that's going to take place over 6 months. But it's also a depletion of spares, right? It's a depletion of the safety net of supply. So the other thing that it's going to do is that it's going to push prices higher, we think, over the medium term. So maybe the short term, you get some relief in terms of cutting off the upside, but you do put a higher floor under prices for longer.
What did you make of President Biden when he sort of accused certain companies of exploiting the situation, and what impact do you think his comments might have on those companies?
Yeah, I mean, this is rhetoric that's been going back and forth for the last several weeks, right? I think the frustration is that prices are high. In a normal cycle, companies should use this opportunity to increase CapEx, increase supply, and that helps to bring the market back in balance. But I think this is not a normal cycle, right? I think companies over the last couple of years, have seen investors push them to shift their priorities away from growth, away from capital investment, and towards shareholder return, increasing dividends, maximizing buybacks, prioritizing those things. With all the profits and the cash flows they generate. So this has been a theme that's been built up over the last couple of years. And now, companies have found themselves in this position, as President Biden said, generating record profits and cash flows. But their investors, again, are still holding them to a different set of priorities than in the past. So I understand the frustration. In a normal cycle, you would want supply to increase. And by the way, the best cure for prices, whether it's 6 months or 12 months or 18 to 24 months or beyond, is an improvement in supply, right? We're not going to see demand decrease anytime soon, and the SPR doesn't really, do much to encourage supply. So I understand the frustration, but companies also, have kind of had their mandates shifted by investors, so they too are sort of holding firm at the moment.
This release of strategic oil reserves, the 1 million barrels a day, will go into both domestic U.S. as well as international markets for up to 6 months. Now, we know that continental Europe is extremely exposed and that in time it could cause some tensions, let's put it that way, within the NATO alliance because they are more exposed to increased prices and the sorts of things that we're seeing Russia impose, for example, payment in rubles. Do you think there's going to be tensions as to where the barrels go? So this 1 million barrels a day, in the 6 months that perhaps the U.S. would have domestic reasons to prioritize the American market, but strategically it would help if they were sent to Europe?
Yeah, no, it's a great question, and I think I think much of this it'll be determined over the next several months, right? I think the priority again is to get as much supply to domestic refiners because we have driving season coming up over the next couple of months, and we want to make sure that there's enough production of gasoline and diesel and other products. But I think there's also a key question is how much logistically can get into the domestic refining system, right? Yes, we can say the goal is 1 million barrels a day of SPR release for 6 months, but we think there's going to be limitations on how much can actually flow into the domestic system because of logistical and other bottlenecks. So certainly some amount of it will go overseas, right? Will get exported overseas, and right now you have some pretty wide WTI Brent spreads, some wide ARBs between domestic and international oil. So there's definitely an incentive to push a bunch of this oil overseas. Now to your question, I don't think there's going to be really tension as to where this needs to go. I think it'll find its way to the hungriest buyers. We think, for example, India could be a market that takes in a lot of this crude. India is a market that's seeing demand rebound pretty strongly. And they've been buying Russian crude opportunistically, but certainly they could take more of these SPR releases that get pushed overseas. But the European market should also be a market that's able to take some of it, right? Especially some of the medium and heavier barrels that fit better with European refineries. We think some of those could make their way to Europe as they try to wean off Russian oil. There's a lot of talk of them weaning off Russian gas, but they're also looking to wean off and trade less of Russian oil. So there is an opportunity there. To your question, I don't think it necessarily creates tension within the NATO alliance. I think Europe will take whatever volume it can get, and I think the U.S. is trying to put a lid on prices at least over the short term too, right? Which will generally help whether it's consumers here in the U.S. or across the Atlantic in Europe.
Abhi Rajendran, Head of Oil Markets Research at energy information company Energy Intelligence. Sir, thank you so very much for having shared your views and expertise with us. Thank you.
Thanks for having me.